Welcome back to Stock Tricks with Nick for the trading recap from November 30th to December 4th. Hope you guys had a better trading week than I did. You could see lost $716, so 1.86% of my portfolio. And the worst part was we had a lot of breakout stocks from the watch list on Sunday and on Wednesday. If you guys are new to the channel, we do these recaps on Friday. I put together a watch list for Sunday, and then we do a live stream on either Tuesday or Wednesday, depending on how the market's shaking out. We call it Midweek Movers. We take a look at the stocks that are setting up to explode for the rest of the week. Some notable winners and losers from closed positions this week. Open position still, Net, Snap, DNLI, and RFP. Those are up over 10% each, so those are going strong. And then some notable losers that we'll cover in more detail, GOGO, FOUR, SRRK, and BLDR. All right. Let's jump to the agenda. So we'll be going over the market recap, looking over S&P 500, QQQ, DIA, take a look at my open positions, along with some technical analysis on Net, DNLI, RFP, Snap, and AMD. Those positions I either got in previous weeks or in this week. And then want to look back at the midweek movers and the Sundays watch list to see how those did. And then we'll wrap this up with some of the closed positions that I have to take a look at what did I do well, what did I do not so well. And this week, since we had a lot of losses, we should cover those. So TPTX, SRRK, 4, and GOGO will be the main focuses of those. So you can see a little disclaimer. All of these are my own personal trades. Please do your own research. Trading has real life consequences. So let's jump to the current holding positions right now. So you can see I have a lot of names with a small amount of portfolio in each of them, with my largest one being Net. That's at 8.2%. That was sitting a little bit over 10% earlier in the week. I have taken some profit on that trade. All the stars that you see we'll be covering in a second here, but for the most part, still trying to find some traction. Today on Friday, we had a lot of these stocks either breakout or just press higher and hold. Currently, all the stocks that I'm holding are in a winning position. You can see I'm 53.3% net long. So compared to last week I went, well, I guess I went into this week 112% net long using some margin. I have scaled that back, added a 16% portfolio short on QQQ just as a hedge. While the market might be a little overbought, so want to kind of hedge positions with that. So those are the current positions I hold. We'll go into a couple of those in more detail. Let's jump to the market overview. Let's take a look at S&P 500. This week, we closed up 1.7%. So you can see this red candle is on Monday. We pulled lower below the 8-day exponential moving average right here, found support, jumped back up, and then the rest of the week, Tuesday, Wednesday, Thursday, Friday, rallying and all the way into the close on Friday. We're at all-time highs now. So that's great news. You like when the market's up. Let's go QQQ. Similar story. A lot of stocks. You could see this long lower wick, similar to the S&P 500. If you were trading on Monday, some of the growth stocks, a lot of those tanked in the first 30 minutes. I got stopped out of some, and then they just rallied right back to the rest of the day. So that was a tough trading day, but hopefully not all of your positions got stopped out, because we did rally on that day, and that set up the rest of the week to run to. Let's see, is this at new highs now? So 303.50, 305, so at new highs. And finally, Dow Jones, DIA. You can see really strong close right at the high. You can, honestly, if this was a stock, this is a nice tightening pattern for a possible breakout through here. We're above the 8, and the layer of all the moving averages is in an uptrend. So you have the 8-day exponential, 20-day simple, 50-day simple, 200-day simple. So that's the right kind of trend that you want for a stronger market. So even though the markets overall, the general markets are in a strong trend, a lot of growth stocks continue to be choppy. We've seen a lot of breakouts fade, and that's why I had to scale back the aggressive position that I had going into this week. So let's take a look at some of the open positions that I have. We'll start with NET and ET. Let's throw the trade history on there. So you can see we've covered this before, but tried to buy in here after the strong breakout, just over some previous highs, then got stopped out. But don't want to throw away the charts of stocks that you get stopped out on, because if you're looking at the right charts or the right stocks, they typically end up setting up again. And it exploded on earnings, then got really tight through here, took an initial position, 5% of my portfolio, on a break over the high of 65. Let's see, what did I get filled at? Got filled at 65.43 right there. Traded in a slightly higher range. That 8-day exponential moving average held really well all the way through. And then we had a couple long upper wicks showing selling pressure at those higher prices. So on this day, when we closed, when it was clear that we were going to close above those prices, I added another 5% and then moved my stop up. So the risk that I put on, the initial size, was the same risk for even more size. So this is a way that I could scale my position higher and keep the same amount of risk. So if a stock does explode higher, I have more size on it. And thankfully, that's exactly what it did. The next day, the 27th, we moved higher, sold some into strength, and you can see I've been kind of selling on strength through here. Let me hide those now that it's a little distracting. So we had one pullback day, I guess two pullback days. On Monday, we undercut the previous low. Tuesday, we had a strong just selling day that was down about 3%. Wednesday, now this is where it gets tricky, because we had another lower high, lower low, and a long lower wick on Wednesday. Thankfully, this did not hit my stop loss. So I stayed in the trade, and the fact that it ran up and recaptured that 8-day exponential moving average was a really strong signal. So didn't take any off on that day, and then we got some follow through, and I did sell some into the follow through. So now sitting at about 80%, 75% of my original position, with a good profit on that. Let me jump to that. Open positions. So net, we're up 15.15 so far on that. I have booked $230 of gains. So that's NET. Let's take a look at DNLI. And this one was from Sunday's watch list. We talked about it on Wednesday's Market Movers watch list, and just in time, because it really started getting going on Thursday and Friday. So throwing the trade history through there. I bought as it broke over the high point from 11:30, so got filled at 64.97 and 63.18. That kind of a mix up between two accounts there, but had to fix that. That's why we had that second buy. Accidentally bought it in my Roth instead of the normal brokerage, but have an average just around the high of this day. And then on Friday, and what I wanted to point out is that break over the previous local high point came on much higher volume. And we had a green day on high volume right here, and that was another signal that this is tightening up after a really strong breakout. Let's see, what was that? So we had 200%, 215% breakout, and then from the high here, we only pulled back 19%, right to the 20-day simple moving average. That started getting really tight. The volume pattern was exactly what you want to see. Pullbacks, the red days, very small volume, and then any green days on larger volume, good accumulation there. And then we saw great breakout and hold at the end of the day on Friday. Now we closed right at the high of the day, above the upper Bollinger Band. I did take some size off just to book that profit. my stop is now at my entry. No risk on this trade after we signaled it on Sunday's watch list. So definitely look for that video Sunday morning so we can find some more winners. Next, we have RFP. This is another one that we talked about on Sunday, talked about on Wednesday. One that I had bought earlier, really small position because I didn't get filled at, I missed kind of the ideal buy. And zooming out, this does violate one of my trading rules where you don't want to trade a stock with a lot of overhead through here. But it was far enough back where I was comfortable taking a position because the 200-day started to move in an uptrend, and it was 200-day, 50-day, 20, 8. So all of the trends or all of the moving averages were in the right direction. And then we did have, let's see, 175% move from June. And then from then, we saw that pullback here to the 50-day, around 23%. Another pullback, 19%. Another pullback on that day, 10%. And then the final one, 6%. So you get that volatility contraction pattern. 200 days in an uptrend, we're above that. So I took the trade after I saw this was breaking out. So I got filled at 556 on the first part. It continued its breakout the next day, then pulled back to the 8-day exponential moving average. Notice the volume on the pullback was very, very light. I liked that. So as it had this inside day, I did take another quarter size position. This wasn't a very large position because it has that strike against it of having overhead. So about 5% of my portfolio on this trade at this point. We had even another inside day, but that one with a little bit increased volume. So liked my odds on the trade still. Had my stop loss just below, so not risking too much on the trade. And then Thursday, we had a breakout with a pretty high or a pretty long upper wick. A lot of those breakouts were pulling back, so sold off a quarter of the position at 590. And then today we had an even stronger breakout, up 8.52%, and sold another, what would that be, eighth of the original position at 630. So sitting now, RFP, where are you? RFP sitting at 13.8% profit, already booked $75. But again, pretty small position size, but something that we talked about on both of the watch lists. So hope you guys turned in with that one. Let's go SNAP, Snapchat. Tried this trade a couple times. Got a really clean breakout here, but then got stopped out on the first vaccine news that Monday. And then again, not throwing away a good chart, just watching, letting it set up again. And it did. After bought in after it broke over the high from 1116, so got filled at 4183. Let's see, the high was 4180 on that day. So right through here. Got in there, sold some as it went through multiple of my average gain, and it gapped up above the upper Bollinger Band. When it does that, I typically like to take just some profit off. If it runs, that's great. But as you see, it sold off right at the beginning of the day. And then you get that red candle outside of the upper Bollinger Band. Typically, that means kind of continuation of a pullback. Got that the next day, and then kind of choppy sideways trading. Took a couple shares off, still at profit, just to lighten up my overall exposure. Because remember, I was 113% net long going into the week. Had to scale that back as I wasn't getting some traction. Some breakouts were pulling back. I was getting less confident in the growth market. But since then, on Wednesday, this was holding really good relative strength in the morning, and you see it explode over what could have been another buy point using the high from 1127, or you could have drawn kind of a diagonal to even get in lower. I already had my position, so I wasn't trying to add to it a day after I scaled everything back. So A little bit slower to react, but again, I need to be cautious because this was a losing week. I can't press when I'm not finding the traction. And then Thursday, Friday, good continuation, higher. Today we had an inside day, not much from this guy, but still, let's see, we are up. Snapchat up 15% on the trade, booked a little bit of profit, so liking that. And last one, AMD, another one that we talked about on Sunday and the previous market movers not last Wednesday, the Wednesday before that. Really solid VCP setup, similar to how it set up last time. Had a couple months of coiling, volume got quiet, then really quick explosion. Here we had those pullbacks. The first one, 22%. Second one, 17%. Third one, 11%, right through there. And then this fourth one really set up the trade for me. That was only 3%. So at that point, I'm using the high from 1117 as my buy point. Got in with a break over that. And you could see, let me move that over. Volume increased on that breakout day. We closed at the high of the day. That's a great sign for me. So at that point, I'm in. Got some sideways trading, a long lower wick undercutting the 8-day, but not hitting my stop. And then we just kind of gradually went through until we had a strong breakout day on Monday. That was up, I think, about 6%. Closed right at the high of the day, above the upper Bollinger Band, on much increased buying volume. So that was a great signal. Then we had some more continuation. First red candle, kind of outside of the, for the most part inside, but had a little bit outside the upper Bollinger Band. So I took a little bit of size off just to book profit, moved my stop to my entry. So now this is a risk-free trade on the rest. Today we had started off with a pullback right to that 8-day exponential moving average, held a support, and then moved up and closed somewhat near the high. And I think the highest close price ever. Am I wrong with that? No, looks like it. So strong move, really tight action for months. So this could be a really strong breakout. Glad we talked about it. That was a good one to watch. And kind of just wanted to jump back to the open positions that I had. You could see all the positions that I'm up the most, I do already have some profit booked. So I like to take profit while it's there, move my stops up to my entry. That's something that I kind of got away from in November, which was the worst time to do it because we had so much uncertainty with the election. Vaccine Monday, the next Monday, I also had vaccine news, which is great, but for the growth stocks that I was trading at the time, really hurt those guys. So trying to get back into booking some relatively quicker profits just on a smaller portion of my trade so I can keep the stop the same place, move it up when I can get there, and then reduce risk as soon as possible. And you can see I am in the money on all of my trades except for QQQ. This is a short hedge position. So again, I'm trying as a breakout trader, you try to cut your losers as quickly as possible and let your winners run. So by reflecting portfolio that right now has no losing positions, that sets me up for a good next week because I'm not letting losers eat at my account, eat at my capital. If my money's going to be in the market, I want it to be working for me immediately. If it's not, then it's at risk in the market. So it's better to keep it on the sidelines as a cash position unless it's working for you. All right, so let's open positions. So Sunday's watch list. Yeah, let's go over this guy. We had some really, really strong breakouts. COHU up 37.2% from last Friday's close. That was a great find. DNLI we already covered, up 18.6% from last Friday when we called it out. AHCO 17.4%. ALGN, that one we had been talking for a while. I've had a position for a while. That was up another 9.7%. AMD we just covered 7.9%. And we'll cover couple of those in some more detail. Did want to point out the biggest loser from Sunday's watch list was SRRK, and unfortunately, that was one of the trades that I took. We'll cover that once we get to the completed trade breakdown. So for the most part, the average return was 4.4%. But again, if you got in on some of these big winners, you did really well. So let's cover some of the technical analysis behind those trades. So first we have COHU, the biggest winner up. So we let me zoom out. Before this massive breakout on huge buying volume, you love to see that. We had a break of 71%, so not quite a high tight flag, but a really strong move up. And then we pulled back to the 8-day exponential moving average. What we really liked setting up was the the undercut of all the previous lows in the pullback on 11.25. So you can see the low here is 26.52. The previous low in the pullback was the 26.84 spot. So anyone who tried to get on a very quick bounce put their stops right below that. That got shaken out. So that means a new group of traders typically are going to be getting in this name on the next breakout. And you saw one move up on very low volume, and then that was the end of last week. So we talked about how a break over the high on 11.24 would be your buy point, and got that on Monday with huge buying volume, but it didn't go too high up. It did break the previous high point, but nothing too crazy. The next day, did it undercut the previous low? Looks like it. Yeah, undercut the previous low. So again, that if you're in the stock already, that's not ideal. But the more you can undercut the previous lows, shake out as many traders as the stock can, typically the harder it runs when it does get going. So you can see one quick break under the previous day's low, hit the 8-day exponential moving average, and shot right up. And this volume is massive volume as it continues two closes near the high of the day both times at the upper Bollinger Band. So that was a 37% move from last Friday when we called it out. All right, let's go SSTK. This is one that a lot of breakout traders had on their watch list, so it wasn't too surprising to get going. But again, this is one that probably shook a lot of traders out of the idea because it was setting up really nicely through here, and it looked like it was going to break over the next day's high, and then it just shot down and kind of undercut all the previous lows except for the first day. So that was terribly drawn. So you see, this is the lowest, I guess, second lowest from the pullback. But as this got tighter and tighter and tighter, anyone that bought in the base probably put their stop pretty close to the low because they could have gotten a really nice risk reward on that. We got a shakeout under that. That set up the trade, and then huge buying volume came in, and we started moving up through here. And now you've seen a couple tests of the 8-day exponential moving average held as support. You have this large volume shelf. So this is all the volume within the price range here. And so a lot of new traders getting in at this point. That's SSTK. That guy was up 6.7% from the Sunday watch list. And then we have ALGN. This is a trade that I took on this bar as we broke over the high from 11.16 after kind of a gap, pullback, and a wiggle setup. So after that, even though it broke out, the next day it started pulling back. So that reset the trade up for anyone who wanted to take it. You could have bought, forget what we said on the live stream. You'll have to check, but 27th. Yeah, so I think we were talking about either the high that would have been 486 as a buy point. That's what I typically like to use, previous local highs there. So saw one pullback 40 cents below that buy point, and then just 4 days of solid running with large buying volume. So that's ALGN. I still have most of my position on this, still looking strong because got in at such a nice price. So we're working that one. Let's take a look at the Midweek Movers watch list. This is the one we did on Wednesday this week. So from this week alone, DNLI, again, we covered that already, up 16.2% from the time we mentioned it. That was great. RFP up 13%, SE 8.1, FOSL 7.4, DEX 7.2, EXAS 6.8, and Qualcomm up 5.1. The only loser on this list from Wednesday night was AMRC, down 2.2%, but still coiling up. That's not out of not taking that off the watch list anytime soon. That looks pretty solid right now. Let's cover a couple of those guys. We'll start with SE. So this is one that has been running all year long and gave us a really nice tightening range to set the trade up. So you see this last breakout here, and then we get some VCP action, but a little bit shorter than what Mark Minervini typically likes to trade. This is only a month-ish of coiling. So this first pullback, 17%, second pullback, around 12%, third pullback, 6.1%, and that set the trade up. So you got those each pullback on tighter and tighter magnitude, volume on each pullback getting lighter and lighter. One thing that I didn't love about this chart tightening up was it seemed like the selling volume was heavier than the buying volume on each of the pullbacks. Doesn't mean that the chart was no good. It's just going to be one strike against it, like the strike of overhead on the RFP trade. So on this, tightened up, tightened up, tightened up. You have 4 days here with highs of basically the same: 182.75, 183.80, 183.50, 184.93. So a break over 195, what we talked about would have been the buy point. We opened right at that, ran up, and then squatted that day, as a lot of the breakouts were squatting. So kind of frustrating with that. And then today we got an explosion, higher highs, higher lows, closing at the high of the day. And look at all that volume. The last 3 days, you could have actually bought on Wednesday when it undercut these two lows. So that's 173.91. We didn't quite undercut that, but buying volume picking up on after gapping down at the open, then recapturing the 20, recapturing the 8, and breaking over the previous couple of days highs. That could have been a buy day, but the next day would have been fine as well. So that's SE. Let's keep an eye on this. This is a lot of buying volume over all the previous selling volume days, even in this kind of first, in this main selling block here. So that's really something to keep an eye for. That's SE, EXAS. This is one that I called out a couple weeks ago as it broke out kind of twice through here. Look at buying volume on those breakouts, and then it pulled back to the 8-day, kind of rallied, and then pulled back again. So I was watching the high for 11.4 as a buy point, so 128.46, and then that chart fell apart. We got 3 strong red blocks there. Pretty normal selling volume, nothing crazy with that. So didn't take it off my overall watch list, but took it off the stocks to buy this week or keep an eye on this week. And then we had a rally pullback, and then the high from that rally could have been a buy point, so 121.88. And then we covered, you could have bought at the high from this point, that's 125.81, or the kind of the initial high that I was looking at, 128.46. Any of those would have been valid entries. We see larger volume than the selling coming in. A really good extension day on Thursday, and then maybe an opportunity to sell some into strength on Friday. Now we have a slightly longer upper wick, only up 1.6% today, but uh, great breakout, something that we had on the watch list. I didn't personally trade it, but I'm not going to be able to take every trade that I put together. On Sunday's watch list was 20 stocks. On the midweek one, that was 12. I'm not trying to overtrade, but I want to look at all the opportunities that we have. And we had Qualcomm as well. With this, what we were talking about on Wednesday was just a clean break over the high from 1118. We got that today. So we had an inside day, which set up the trade. We could have taken the trade break over December 1st high. That was 152.39. But I was looking at it at 153.33. Again, this is not one that I personally traded, but broke out, closed at the high of the day above the upper Bollinger Band, and those were getting tight. You can see average true range pulling back through there until the breakout, and you can see the right volume pattern with breakouts being green and high, and then the pullbacks, especially the last couple pullbacks, were really light volume as the rallies were heavier. So let's see how this turns out. Didn't get quite the volume that you would want to see on a break to all-time high, but still a solid entry. And if you got in, you're already up about 3% on the breakout point. So it's always better to be in the money. And last one we're going to cover from the Wednesday's midweek movers is PDD. This was a stock that I traded as well, where really strong breakout through here, obviously, and then we had the pullback, another breakout, pullback, rally, pullback, and then what I did was this was Wednesday, yeah, on Wednesday, as the stock broke under the previous lows here. Did it undercut? I don't think it undercut this guy. 128.80, 129. Yeah, so it didn't quite undercut this last guy, but the three lower wicks here, it all undercut those, undercut the 20-day simple moving average, and then rallied all the way up and broke over the previous day's high. That was my buy point. Something that undercuts those lows, sets up a new trade, and then if it reclaims the previous day's high, that's a possible buy point for me. If you wanted to get kind of aggressive with that, you could have done, I wouldn't say that. You maybe a diagonal entry, but you want to be kind of sure that this is going to rally and hold. So that moved up, but still a little bit concerned about this, just because the volume on this 3-day kind of rally has been much less than the selling on this day. But maybe some of that volume is captured running the stock back up with big buying volume instead of the selling. So hard to tell. Not the cleanest setup, but that undercut of the previous lows and then buying back on the way up is a good trick to have. All right, let's see. So those were the midweek movers that I wanted to cover. So both watch lists did amazing this week, and that's what hurts me even more because I did the work Sunday, did the work Wednesday, had those watch lists ready, and I took some trades that I wasn't as prepared for as possible, and kind of chased a couple names that I shouldn't have been chasing. So I wanted to cover the 4 stocks that I had made the most mistakes on, because it's always good to look at your losers, relive that moment. So when you go to put on a trade that's similar to that, then you either won't put the trade on, or you're going to place extra caution, maybe not as much size, anything to not make that same mistake again. So let's start with TPTX. This was a really strong move. I think this was a high type flag, maybe. So 127% move higher from, what day was that? August 10th. Then we had a pullback of 25%. So right in that high tight flag option. But basically what I saw here was pullback, breakout, tighter pullback, another move high, and then one day low set the trade up perfectly for me. So I was using the high from 1127, so 110 as my buy point. Because it was so close to the 8-day, the 20-day, and the 50-day was running back up after a really strong breakout, I put a ton of size on this. Well, a ton of size for me, where put over 10% of my portfolio, which typically, um, when everything's working and I already have a lot of traction, that's what my kind of main position size would be. But this was one of the first trades that I since since October or so, since I had 10% on other than NET. So put a lot of size on this, immediately broke out. I was really happy. Took some off the next day into strength, and then right away the next day it pulled back, and it was pulling back on such low volume that I didn't move my stop to my entry, even though I had been up 10% on the trade, because I wanted to see. I was saying to myself, it's just low volume. It's low volume. Let it come back. Let it come back. Let it come back. It'll rally. Then and it undercut my entry point, and then even pulled back lower. So I was losing on the trade. Next day, it kind of rallied. It was up 2%. I took another sixth of the position off. I took 1/6 off at the high, near the high, 1/6 off, basically right at break even. And then on Friday, when this didn't immediately break over the previous day's high, um, I had to take the rest off. I lost, let's see, what did I end up losing on that trade? 150 bucks. 3.8% down, but it was a 10% winner. I should have moved my stop to my entry, should have protected that. No way should I let a 10% winner become a 4% loser, especially one with that much position size on. So have to be stricter with my risk controls, have to continue to play defense until I really get some good traction with the stocks that I trade. So that was a tough one to swallow. Next, we have SRRK. This one was on the watch list, and I was hesitant to put it on the watch list because the only kind of valid entry on this was a break over the previous highs here. So that was, what was it, 48.11. And I was hesitant to do so because it just kind of, after the pullback here, and this pullback undercut all the previous lows, so I like to see that. But then it just rallied straight up to that point. And that, let's see, from the move down to there, there's already a 28% move. There's no way I should have taken that trade. If I was going to take the trade, I should have taken it on this kind of 1-day pullback through here and then bought at that range. This was already too extended from its initial kind of move, or in its initial move. And because of that, we got 2 sideways days, and the pullbacks pulled back basically right to the breakout point. So I was even on the trade, and then it fell all the way through, stopping me out on the trade. So this is one where it's a good chart to watch, but probably shouldn't have put on the trade. I know it was a break to new highs, but this isn't in one move extending 28%. Have to wait for the chart to get a little bit tighter next time. So my mistake, lesson learned. Let's take something away from that. And hopefully you guys take stuff away from when I talk about this too. It's good for me because admitting the mistakes I make, I have to relive everything on the screen, and then I go and I journal the trade. So I relive it like 3 or 4 times, and that helps me not make those same mistakes in the future. So even better, if you guys can learn from my mistakes without losing any money, that's the ideal situation. And that's part of the reason I make these videos. So let's get on to another trade. This wasn't a huge mistake. This was me adding to a position a little bit too aggressively, and getting stopped out at a reasonable stop, but with too much size because I was too aggressive with my my ad spot. So let's throw the trade history on there. So bought with kind of a break over the 1120 high, 5% of my portfolio with that size. And then the next day, as we got another break, and then this break was a break over the all-time high because this is an IPO stock. So I was trying to get a lot of size on a break over all-time highs, hoping it would run like CRSR did. And then thankfully, one smart thing that I did was with the half of the position that I added on, I moved that stop up to my entry on my first stop. So it wasn't like I was taking another position higher and then keeping the same stop on everything, which would have made a disastrous pullback like we saw here. So thankfully, this was just, I think, 6% pullback. Let's see, what was it? 6.5% down, but because I added a little bit too aggressive instead of adding after a breakout and then kind of another setup, I had a full position size on when I got stopped out of the first part on this day with a break under that first ad spot or first time I took the trade spot through there, and then we had a secondary offering that stopped me out of the rest. So that was FOUR. Lesson to take away from that is just be careful with adding to your positions. If you're going to add to your position, make sure it's after the stock sets up for another breakout. And finally, GOGO. This one really hurt me this week because I tried trading it 3 times. Thankfully, each time I took the trade after the first one, I took it on less and less size. But this was me chasing a quality setup that just kept on working against me. Instead of taking kind of the first hit and then walking away, letting it set up like I did with Snapchat, where I got hit and then I took a break, let it set up, then got back into the trade when it was after it set up again. With GOGO here, took the trade on the breakout over this local high point, had an inside day, then undercut previous lows, cut me out. So took a loss there. Then the next day, we shot up back over that high point. I tried to get back in. It broke out. I was feeling good. And then it came right back and closed basically even on the day. And then the next day, it pulled all the way back. Actually, the second trade I did, sorry. Second trade, I put it on. A lot of the breakouts were squatting, so I took it off right away. Wasn't a huge loss. And then later on in the day, it went past that buy point again, so I put it on again. And then that time, another mistake from there. I must have accidentally set this as a daily stop instead of a good till close, because when I was running through the trades through the rest of the day, I was like, why did I not get stopped out? Because I had my trade set up the wrong way. So the next day, put my stop under the previous day's low just to see if it would get going again. It did not. So that's 3 losing trades, thankfully with less and less size, and just trading error on me. I must have done a daily stop instead of a good to close. So one thing takeaway with that is before the market opens every day, I'm going to be going through all the positions I have, make sure the stops are for every single share of the positions I own, so I don't multiply an error and add on to it. So a couple good takeaways from a frustrating week. If you're going to be frustrated, if you're not going to make money, you better make some lessons. So that's what I did this week. Friday, we saw some really good traction, was up pretty good today. Everything was moving. Now I'm holding all positions that are in the money. So let's see how next week goes. Make sure you turn in on Sunday when I post my watch list, because we saw how good that Sunday watch list did this week. If you're not yet subscribed, please subscribe. We do this Friday, watch list Sunday. watch list and live stream on either Tuesday or Wednesday, depending on the market. Also, give me a follow on Twitter, that's Stock Trick Nick, and on StockTwits and TikTok, that's Stock Tricks with Nick. Leave a like if you enjoyed yourself and if you learned anything. Have a great week, and I will see you guys on Sunday.